مساء الخير جميعا. It's my pleasure to be back with you again with a very interesting and exciting conversation with probably two of the most interesting people that we can talk to about fintech, startups, fundraising in Egypt. So, Islam Shawky. Islam is the founder and CEO, co-founder and CEO of PayMob, a fintech digital payments company, and he'll tell us more about this. And Basil Moftah. Basil is a partner in Global Ventures and NClude, and he's one of the people who are pushing the venture capital space in the MENA region and in Egypt and doing a lot of great things. And the interesting thing is this is probably one of the very first conversations where we have between a startup and an investor who invested in this startup. So Basil was part of the Series A, Part 1 and Part 2, and then the Series B.
I invested 4 times in PayMob.
4 times. I know about only three of them. Includes.
3 global ventures and 1 includes.
And 1 include. So a 4-time investor and the startup. So this is going to be a very interesting conversation about what's happening in that space, why is that space interesting and everybody's looking at it, and why would you invest in a company like PayMob? What's the rationale? And then the differences between Series A and Series B. Everybody here, most of the companies are raising in the early stage, seed and pre-seed. Very few in Egypt, probably 20 to 30 have raised Series A, and I think a handful have raised the Series B. So just understanding that evolution, what does it look like? It looks easy from the outside, and I'm sure Islam has a lot of war stories, and Basil also has a lot of that. So let's start from the beginning, just by way of introduction. Islam, what does PayMob do? And kind of the 2-minute summary of the story of the company. Where did you come from, and where are you now?
So definitely it's a pleasure to be here at AUC, and definitely it's a pleasure to be on stage with 2 of my mentors and partners. So at PayMob, what we do is that we build the infrastructure for payments in Egypt. We try to help businesses and consumers perform digital transactions and give them better access to financial services. Actually, the founding story is very funny, is that actually at the beginning we were never intending to build a payments business, because we were really excited about e-commerce and about this digital economy. So we've built a startup which was never launched. We called it Social Tab. We wanted to do social commerce and influencer and affiliate marketing kind of business. Unfortunately, it didn't work out because we saw the gap or the lack of digital payment infrastructure in the country. So we said, if we are bullish about the digital economy and if we're bullish about digital payments, then we should focus on this problem instead of e-commerce, and hopefully hundreds of thousands and maybe millions of freelancers and entrepreneurs are going to build their businesses and hopefully use our payment rails. And I mean, fast forward this was like almost 6 years ago. Fast forward this, we operate in more than 4 jurisdictions right now. We serve more than 100,000 merchants, and the company grew from the 3 co-founders. Now we're very proud to have more than 1,000 colleagues at PayMob.
Fantastic. And Basil, just for the uninitiated, tell us a little bit. You had a long career in the industry, and then a few years ago you decided to join the VC space. So what got you there, and what are you doing in the VC exactly? Just to give people context of who you are and what you do.
I'll try to do the elevator pitch. So I started in VC in '97 in San Francisco. In a CVC, it was a corporate VC arm of Reuters, investing in all sorts of technologies, Yahoo, Netscape, VeriSign, WebEx, a few things like that. And then I did my MBA. I ran a bunch of different businesses. The last business I ran was a $1 billion business out of Washington, D.C., 4.5 thousand employees, 32% EBITDA. It was a great business, sold it to private equity, and then decided to rejoin back into VC. And it was in 2016, I had moved back to Dubai, and I basically started to realize, like many people, the tech scene was about to take off. There was lots of new entrepreneurs and entrepreneurs building some very meaningful things, just like PayMob is a great example, that are solving fundamental problems. I mean, the story, you asked the question earlier, why fintech is getting so popular, what's going on? It's because it is the multiplier effect for digitization. if you can move money, take money, accept money, transfer, cash in, cash out, all the things that we know about fintech, then you enable 1,000 other businesses and industries to be transformed. And the same way that Islam, Alain, and Menesi, Mustafa figured out that they couldn't build their shopping website that they wanted to until they built the payment infrastructure, is exactly the reason why fintech is where it is today. I think they were lucky to stumble on it a little bit early, that's all.
So when you first met PayMob or Islam, what made this company attractive for you to put money? I mean, you meet thousands of companies.
I wanted to invest in Alain, by the way, and not Islam, just to be clear. Right? I'm just going to start there. The first meeting was like, هو ما بيكلمش ليه? So again, why is he not talking, right? Alain's doing all the talking. Menesi قاعد على اللابتوب وإسلام ساكت. And بالظبط Menesi got bored and wanted, I think he was playing games or left. So it was a terrible meeting, right? Terrible meeting. But Allah carried the day. But it was important, and again, these are little subtleties, but you notice the chemistry between the founders because they had been a number of years working together. They had developed an ability to complement each other. Everybody knew their roles and responsibilities. And you realize بعد شوية, Islam, مخ, Alain, عضلات, Menesi is actually the one who does anything in the company. And what does that mean? It means that you have the skills, the complementary skills to build a company. Now, don't get me wrong, there are lots of single founders out there that are great, but it is important to have complementary skills around the table. They told their story. We looked at their numbers. The story and the numbers didn't match. But we knew the story was correct, and we worked on the numbers together, right? We sat and we redid the spreadsheets and we did the calculations until we figured out how this business will make money and how it will scale. And that's why that's how the investment happened. But it was an honest conversation about what do they want to do, how do they want to do it, why they think this is important, much more and genuine, much more than a pitch. I hate the word pitch because انت مش بتبيع لي حاجه انا مش عاوز اشتري منك حاجه. I want to partner and work with entrepreneurs who want to build. انا مهندس and I'm looking for builders, if that makes sense, right? Don't pitch me. Don't sell me. Convince me that we should go on this journey together, and this guy is the mukh, I guess.
And Islam, a very basic question. You spent about 4 years with the company with very, very, very little money. And then suddenly, PayMob started raising and then raising again and again and again. First, tell us about the first 4 years. Why didn't you need a lot of money? Because a lot of people just go immediately fundraising. I mean, they don't even have a product and they're asking for millions of dollars. And then the second thing, what about the second phase? Why didn't you get to the point where you flipped to the other side where we actually need a ton of money?
Definitely. So when we started back in 2014, the VC market wasn't like 2-3 years ago when you can just go to a VC and ask for $3 to $5 million just for having a great idea. Unfortunately, this wasn't the case, so we had to build it right from the start. It took us almost 14 months to convince a bank to work with us. This is aside from the 6 months we spent with other banks that weren't convinced. So it took us 2 years actually to have our first transaction, and actually it took us around a year to get our first funding, and this was a massive $100,000 ticket. So for us, it almost changed our lives because yes, it was conditional to do 1,000 transactions, successful transactions. So we learned from the get-go that we need to build a very agile organization. We are not going to be able to spend millions of dollars. And I mean, it's very weird now, but for actually 3 years, we were EBITDA positive because we had to actually sustain and hustle until we get the license in order to be able to become a payment facilitator, to be able to onboard merchants. And this was the point that we realized that we have enormous opportunity and we need to have external VC money in order to scale. But the lessons that we learned is that we can build a company, this company can grow. The VC money is for growth, is not to live. And we learned that, I mean, if you're going to sell $1 for 70 cents, you're going to sell an awful amount of dollars, but you're going to create a money-losing business. So from the get-go, we had positive gross profit margins. I mean, people now are celebrating, yes, we've reached to gross profit margin. And I was just saying, I mean, how do you even start a business with negative gross profit margin? I mean, why do you do this to yourself? So for us, we learned this. We learned to hustle. The team, I mean, learned a lot of lessons into, we didn't give any inflated titles, no inflated salaries. I mean, we sacrificed a lot. I mean, us, not only the founders, I mean, like the first 50, 60 people sacrificed a lot in order to reach where we are right now.
So moving from your seed rounds, where you raised this $100,000, to actually getting to the Series A, that's the point of inflection. What is the point of what does that point of inflection look like, where you think I need to move from a very small burn rates, very small spending, to actually now we need to spend a lot of money, and to do what?
Definitely. For us, this was the product market fit when we realized we have this engine. For us, the business is how many merchants do you onboard. So you need to have the right regulatory framework, the right product, the right partners in order to be able to scale. So the idea was, when we asked the bank at first, when we were launching this company, they told us they onboard 6 merchants a month. So for me, I wanted to do 10x the bank. And this is at PayMob, this is how we think. We always try to do one order of magnitude increase at a time. So take this 6 to 60. So when we onboarded 60 merchants in 1 month, this was in September 2019, we realized that we had this product that we can scale. And that's why we started our fundraising. The question, or what we wanted to do, and I mean, we had a lot of fun with Basil, is always, I mean, great, you're doing 60, how can it be 600? And then in April 2020, we onboarded 600 merchants. And then I remember having a talk, and then he told me, go to 6,000. And then I went to the team, and then they were saying, I mean, if we got like 6,000 in 1 month, almost, I mean, there will be no other merchants. And the question was how many merchants they are, because this is a very important question. How big is the market? So here in Egypt, we have more than 4 million SMEs. This is without counting the freelancers that are increasing and people who are selling on Facebook and Instagram. So the TAM is huge. So it was the idea of how can you build the infrastructure and tech in order to increase our acquisition. And then we went from 600 to 6,000 by the next September, which is September 2020. And from this day on, we've been onboarding thousands of merchants every single month. And right now we're thinking of how can we go from the 6,000 to the 60,000. We still didn't crack it, but I'm sure we have a lot of brains in the company to figure this out.
I think you figured out how. I think you figured out how you're going to do it. Let me just be very clear about something, because this is always you touched on it, but it wasn't expressed. Every transaction is profitable. We're negative on the EBITDA level, but we're not negative on the gross profit level. Means we're making money. We are deciding to invest more for market share, because we believe by getting more market share, by getting those merchants, they will stay with us. Now, of course, another problem came up, which is activity rates, churn. Activity rates started to drop and churn rates started to go up. And so there was a few months in the middle, we were like, wait. No more until you figure out this problem, right? And the solutions are interesting. They started to realize certain types of merchants are not good for the business. So they started to fire them. Say, you're not going to use our product, we're going to go and give this product to someone else who's going to use it more often. And we created a very stable, sticky, repeatable business. They did. I just watched. Sorry.
And as you were watching, Basil, what was the rationale behind the Series A investment? So you saw a company that pretty much raised a very small amount over the past 4 years. Great team, great market, and I'm sure you did not invest just because you liked Alan. What was the rationale that made you put at the beginning 3.5 million, and then 3 months or 6 months later another 15? That makes it one of the biggest Series A rounds. What did it look like?
So the A1 is very different than the A2. The A1 was a good team, a good proposition, and an aha moment. And it wasn't in the first meeting, but an aha moment that we had was like, so no one is covering SME merchants? What about Fawri? What about this player? What about that player? And we realized none of them are. They're covering payments, but not that segment. And that segment was huge. So you know what? Let's take the bet. That's VC 101. 6 months later, COVID, there's activity in digitizing the market coming from the central bank and from the banking industry and so on. The product market fit, like we went from 660, all of the things that were mentioned. And hey, this is working. This is working. And now we have a push from the government to make this work even more. It became imperative for us as investors to provide the capital. That's what we're there. Yani, I couldn't ask for more. So the number two was on, yani, let me put this, number one was, A1 was on them to convince. Number two, we knew we needed money, but then we were like, let's go raise enough money to make sure no one else can win this game. And that was the $15 million. And that's what set us up to get through to the 6,000 or 8,000 or whatever merchants per month. Once we reached that level, he can tell you the rest of the story. It became the B series, and I just sat back and said, Yalla, warina.
So the A series, and I'm noticing that you spent like literally 4 years going around, messing around, trying so many different things. But once you had a real good model, and I think this is the point that Hussein Mumtaz was making in the morning. Once you got a real good model, it's time to scale. You don't think about it. It's more about execution, replication, scalability. You're not experimenting. You spent 4 years experimenting. Now it's growth. So reflect on what Basil was saying, and then the path to actually the round B. What was the rationale there? Did you spend the money that fast, or why did you need additional investment so quickly?
So we don't want to like fundraise when our pockets are empty, because this has very weird we don't want to be in a position where we're going to like go bankrupt in 3 months. It's not a very sane way to operate a company this way. I know a lot of founders, they like to take this to the edge. To be honest, we're not one of them. So the idea is that we actually start the fundraising once we've achieved the targets that we've put ourselves in order to fundraise. So for us, when we fundraised the 15, had a buffer in this. We didn't want the whole 15, but as Basil was saying, we wanted to cover ourselves because we didn't want to not capture an opportunity because we didn't have enough cash at the bank. So that was the rationale. However, this doesn't mean when you're raising 15 million that you buy MacBooks to all of the team and all of this. So at this moment, we're still doing the same that we started from, because we see this is culturally how we got here. So we don't like use the funds inappropriately. Actually, when we started the fundraise, we had almost 60% or 65% of the 15 still at the bank. When we finished the fundraise, we had almost a third of the fund. So when we closed the 50, we had a third of the funds still at the bank at a very healthy burn rate. So again, it wasn't the needs that we need to raise, but we felt that we've already covered what we wanted to do with this fundraise, and we are ready for the next phase.
And what's the next phase?
So the next phase for us is the idea was always payments. So the idea was get an SME and do payments to them. And then we realized that payments is just the beginning, not the end of the relationship with the SME. So the SME needs to accept, but they need to pay, they need to manage, and they need to grow. So the way we did it is that we have 3 growth vectors at PayMob. First, growing our merchant base. Now we're at 100,000. We want to go to 1 million and hopefully to beyond. Definitely not only in Egypt. So first thing, we want to scale our merchant base. Second is that we want to start building products around the SME. So getting into payments, helping them with payouts, helping them with their grow, helping them grow by extending working capital finance through other financial institution partners. At the end of the day, we're trying to help merchants go digital, and we're trying them to grow, because we truly believe if SMEs grew, there will be a very positive impact on our economy. And the third vector is grow internationally, because to be honest, we see that there is a stigma of Egyptian companies going global. People always try to focus only on Egypt. I mean, players in the Fintech space, I mean, that started 10 years or 12 years before us. They've never grown outside of Egypt. I don't know why. But to be honest, we had this dream that we need to see jurisdictions and countries that suffer from the same problems and actually try to build for that and take our stack to them. That's why we started with Pakistan, and hopefully we're going to scale after Pakistan and other countries in the MENAP region. So these are the three main vectors of why we did this fundraise.
No, I just want to say, and PayMob is deciding to grow internationally, not because we're just trying to prove the point that Egyptian companies can grow internationally, but because there is the same product market issue, obviously some differences in some of these other markets. So Pakistan being one of them, and a few others that you mentioned. And what I love is that PayMob, فين عمر هو باكستان صح؟ هو باكستان. Omar is responsible for international. He's been on the payroll for a while, right? They're not international. وراح اترمى في باكستان بقاله أكتر من 7 أشهر. فاهم بقى يعني actually ابتدى يحكي لي بقى بيتكلم أردو يعني he got into the culture. I'm mentioning this because it's important to do the research. And it's important to do the research on the ground. It's not about what you read in the news. We're not like Germany or UK or US where there's a lot of data available that you can use to understand. You have to do in-market research. And Omar and several people, Alam, Minesi, everybody, went several trips until we took the decision when launching Pakistan, which is literally now a week, 2 weeks old. And that was over a year of work that someone spent of their life making sure that this will work, answering questions, building partnerships, and all
actually another year at countries. So the international team launched the first market 2 years after they were hired. So the first year we went to a lot of places that they said we're not going to launch there because the dynamics were not right. And then when we decided on Pakistan that we need to spend actually good amount of money and hire team and go, it took us like 7 months to go there. And there is like this there is this scene when I ask our team, did you see it? People queuing in front of the ATM. So if we see, and actually we do this, we actually go end of month, sit in a cafe or somewhere and look at an ATM and see, are people queuing in front of the ATM in this country or not? If the answer is yes, then we understand 3 things. First, they have cards. 2, whether enterprises of the government is pushing money to those cards. And 3rd, wherever they shop, there is no POS and there is no acceptance. And if there is any country that has this feature, this is a country where it needs a player like PayMob because people do not shop at malls, they do not shop at the Zaras or the Carrefours, they shop at their local communities. So we want to digitize these local communities, starting with acceptance and then cross-selling of other services that I mentioned.
I love it when the 2 speakers are actually running the show without the moderator at all, and they're enjoying this.
You want to ask us a question, Ayman?
It's a self-moderated panel. So, Islam, if we talk a lot about, you've been talking a lot about the SMEs and what's happening in that space, but many companies, many startups are getting into the fintech space. A lot of them are thinking about payment, and I tell them payment is saturated. Think about additional value-added services. Where do you see the opportunity in the fintech space? If someone here wants to start a startup, where would you tell them to go?
So the way we see it is that, especially it's part definitely of the strategy of the central bank, that the last 10 years, it was all about enablement. And by enablement, I mean having the right infrastructure. So right now we have cards, especially Misa, more than 22 million cards. We have mobile wallets, more than 25 million mobile wallets has been issued. We have the ACH. We launched the instant payment network. So the central bank was extremely focused on getting the right infrastructure. The next phase, and this was mostly big corporations, big enterprises are mostly the ones doing this work. We're very excited about the next phase, which is the activation. So I have a wallet, I have a card. What can I do with it? So part of it is pay, but the more exciting part is how can I take a certain segment or a certain industry and see what are their problems. That's why we're super excited about definitely companies that are doing digital lending, BNPL, buy now, pay later, consumer finance. And this can be in a certain sector. So we're looking at, for example, Muzari'a, who's doing this for the agricultural business. So a lot of companies are going to do this for certain sectors. I mean, I'm looking at my colleague from Khazna, so I have to. Hello. So definitely Khazna are doing a great job at a certain segment, the blue collar in an organization. So we see a lot of those, and actually you don't need an awful amount of people at this. So if you reach to 200, 300,000 people at this, using your service, you're going to create a massive business. And to be honest, we're very excited about this because we've been like blessed by doing a lot of partnership and being at the heart of several of those companies.
Basil, do you agree with Islam? Are those the companies where you would put your money in the fintech space in the next couple of years?
I already did, I guess. So let me talk about NClude and just to highlight this. It's obviously a groundbreaking fund in the sense of one of the largest fintech funds for Africa, for Middle East. It's meant to catalyze and digitize the whole cash. Everything you think about in cash will become digital, and everything that goes with it. And the fact that it's led or supervised and pushed by the government is itself an outstanding, if not a game-changing event in my mind. Because we went from Egypt is behind on fintech to Egypt is now leading on fintech overnight, right? The regulation, the sandbox, everything, and the fund. But also to be clear, the fund is independently managed. It's IC independent. They gave the private sector the ability to make the decisions that they see is best, right? They just supported this initiative to happen. Now, where does cash lie? Where are the friction points, right? And you have to think not just as a technologist or a businessman or somebody who wants to raise money or whatever. You have to think about the fundamentals of where is the friction. Now, there's a huge friction when it comes to credit, right? It's so underpenetrated that it's incredible. Now, sure, there's problems, and there are certain microfinance and certain areas where we've gone maybe too far the other way. But there are certain people, millions and millions and millions, who are not getting access to their human right of being able to borrow against future earnings, right? Meaning, أنا فلاح بشتغل هبني بزرع بس المحصول هيطلع in 6 months وهبيعه ساعتها. I should be able to borrow against that so I can live. So absolutely industry verticalization, very much like e-commerce, where you had general e-commerce and then verticalized e-commerce. Same thing will happen in finance. And some of the bigger areas are going to be healthcare, education, agriculture, and so on. So I agree. But I still keep my eye very much on the broader players. So PayMob, SME, we believe is their solution will do that. There'll be others, but we believe they will cover the biggest market share. We look at something like Khazna and think about what they're doing on the consumer side. We think they're going to come, pick up a big, broad sector, if you like. We look at someone like Lucky and think about the same type of model, but in a different tier of customers, and you see the same thing. So it is going to be a combination of verticals and horizontals. Our job is to try to create the mosaic that would look like, or to invest in that mosaic. We will get, I hope, no more than 50% of it wrong. And then the other 50% will pay for the first one and will be in good shape as a fund. This is a difficult business. There will be failures. And that's okay. And you should try. And if you fail, learn and move on. But success in it is got exponential returns attached to it.
Fantastic. Last question, Islam. Where do you see PayMob in 5 years?
So for us, I mean, so for us, we would love to be regional. So we're looking at the MENAP region. We want to be the payment rails of the region. We want to be the player, the preferred partner for SMEs, that helping them not only accept payments but do payments and be the financial services enabler. We don't see ourselves the only player, because this is. I think people have tried this and it failed miserably. We want to be this enabler, this infrastructure that other players can partner and depend on and use in order to reach this segment. And in general, I would love to see a lot of companies like complementing and doing things like what Basil is saying. and doing and solving real problems, because I think it's mostly about solving problems, not about just like having an idea and doing a startup. If there's no actual need, I don't think the scale would come.
Can I just add a very, very short, because he didn't use one word that I think is something we discuss a lot. PayMob remaining neutral in the infrastructure of the fintech space is one of its main value positions, right? And there's always temptation, to go towards lending or to credit or to go towards do this app or consumer app. And we have had endless discussions and fights and arguments وخناقات وضرب وكل اللي انتوا عاوزينه, but to say to each other, we need to remain neutral. And I really emphasize this to people building businesses. Do not try to do too much. Stay focused and build partnerships with others. Because confusion then, and as soon as you move into someone else's space, you create precedents that you are willing to compete and change your mind, and that creates confusion and actually deteriorates value.
And to be honest, I mean, like, take an option of us, because this is something that we've discussed. Like, let's go into the B2C space. So for us, we don't know anything about the B2C. We don't have the skill set to go there. And when you look at like companies who have created huge brands in the B2C, especially in the BNPL, like take Value, for example. I don't think by any means we can do something similar to what they've done. So except of just running after people that we see have done a spectacular job that we don't think we're going to do, why don't we figure out a way to compete and to complement their services? So what Value, for example, has done is that people are using now Value to pay, but they're using their credit cards instead of using them to buy directly from the merchant. They're using their credit cards for collection. So we've managed to use our services, but in an indirect way, and complement their services, and definitely open our merchant base to them, so that we can make use of this trend and make use of this force, instead of just competing and trying to just compete with everyone on everything, because we'll never be successful in all sectors and in all verticals.
And at the end of the day, never miss a transaction.
Exactly. That's
Thank you, Islam.
that's the
Thank
hope.
you, Basil. This has been an amazing conversation. Best of luck, Islam, to actually get to the 5-year vision and hopefully make Basil make a lot of money. Thank you, everybody.
روح اشتغل شوية.
صح.